Hey guys, welcome to this week's live video. I have Desirae Odjick on the other line. She is going to be talking to us about how to start up your small business finances and just get in the right mindset right off the bat. I don't know if you guys heard me earlier, but on my Instagram story, I was talking about how I never did it properly right off the bat and I had to go back and do everything over again. So if I can help any of you not make that same mistake, then hopefully it'll be good. So anyway, if you can just hold your questions until the end, we're going to take some questions live at the end, and we have some that were pre-submitted. So we will definitely get to them, but Desirae has a lot to go over, and finance can be a little scary for some people. So we'll keep it as simple as possible, avoid the questions until the very end. And yeah, so let's just jump right in. I have Desirae here. I'm just going to get her up on the screen. Welcome.
Hi guys, it's so great to be here. And I just want to say after that, thank you so much to everyone who put up with the change in schedule. I really appreciate it. I was not well on Monday.
I was trying to be like diplomatic about it by just using the like pukey face emoji, but glad you're feeling better. So for those people who don't know you, which I would assume is probably a lot of people in this group, can you just give us a little rundown of who you are and how you got started with all of this and what we can kind of expect from you?
Totally. So, hey everybody, I'm Desirae. I run a personal finance blog, so not a business finance blog, called Half Banked. And it all started because I was trying to get a handle on my personal finances. I just thought, like, why not write about it on the internet? Like, that's super normal, right? Like, everyone likes to talk about money on the internet. So I started writing about it. And as I was learning more stuff and running my blog for a while, it started to make money. And like, I was freelance writing and doing other things. So it was kind of this like interesting transition into being a business owner now. And so it's been a business for about 2 years that I've been earning income. And because of my interest in all this money stuff, I've really like read a lot about it and taken an interest in how do I optimize my business finances, but also in a way that I don't have to deal with it 24/7, because I think the best way to manage your business finances is get systems in place so it doesn't have to consume your every waking moment, because that would suck. Even as a money nerd, I think that would suck. So the other context to hear there is that I am not a CPA. I'm not an accountant. So all of this is really based on the simple, widely applicable things that I've done to simplify my business finances. So we're not going to get into like tax details or nuanced like legal questions, because I am not the person you should ask for that, but just a really basic kind of starter kit of what you should be looking at.
Which is amazing, because I feel like you could talk to an accountant or you could talk to a bookkeeper about, you know, the things you should be doing. But I think you have this like perfect mix of just like being a normal person and also being able to break it down into like the simple things you need to do. Like, honestly, so for those who don't know, Desirae is also in Ottawa, and we met through our chapter of the Rising Tide Society. And I specifically remember, like, shortly after we met, I was like, can I just pay you to like tell me what I should do with this? Because like it's so overwhelming for most people, and I'm so excited to just like help people the way that you helped me. So let's do it.
Oh God, I'm getting tangled.
I thought you were going to say I'm getting emotional. So let's just do it then. So if someone, so let's pretend I'm the person. I have a full-time job. I'm doing calligraphy or lettering or whatever other art, and I'm thinking I might want to do it full-time. What do I do? I've never started a business properly. I've never sent an invoice. Like, I literally just want to start doing this. So how do I start and do it properly?
Yeah. So the best thing, and something that you should really keep in mind, is that you really don't need anything other than you as a person to start accepting money for your goods and services. So you can be a sole proprietor. I'm speaking for Canada and the US, but both of those jurisdictions have sole proprietorship. So it's basically you as a person can be a business and you can accept money. So if someone emailed you and said, like, I don't even know what a price would be for like one hand lettered card? Like, is that like $20 for a custom card? I don't know anything. So let's say someone wants to pay you $20 for something that you have written or created. You can do that. So the things that you really need to make sure that you have in that situation where you're making your first $20 is you need to provide some form of receipt or invoice for the purchase so that for your purposes, you have a record of earning the income and they have a record of paying you. And then you also need to start tracking your expenses at that point. Because again, in no like nuanced tax way, if you earn income and you spend money to earn that income, you can deduct the expenses from your income. So you'll pay less tax overall if you can record and track your expenses and claim them properly against your income. So the very first thing.
Can we just back up and like really drive that part home? So you are a brand new person who wants to start a business. You haven't registered a business, but you want to charge money. Like you are not breaking the law by accepting money for what you want to do, to sell.
100% no. You are not breaking the law.
I think a lot of people get like really bogged down where they're like, oh my God, I can't charge money if I make money on this. And then, you know, if someone pays me for my work, I'm breaking the law and I'm going to go to jail. Like, I want to like totally dispel that myth because I think it really like scares people away from starting a business in the first place.
100%. So you can accept money as an individual sole proprietor. You don't have to register your business. You don't have to do anything, especially as you're just starting out. And I know because I am still a sole proprietor. So it's been 2 years. I report my income on my taxes. I claim my expenses against that income. The thing you need to watch out for is that keeping the record of what your expenses and your income has been, because reporting them on your taxes is something you have to do. So that is like, there's a learning curve there. But as long as you do that, you don't need to register anything. You can just earn the income as a person and report it on your personal taxes.
So you, as a sole proprietor, your taxes that you're going to do, like we're not saying not to report them. You need to report them, but those taxes are going to be on your personal taxes. It's not like you're doing it on a separate. And I think I remember that being like a very clear like roadblock in my mind at the beginning. I thought it had to be like a totally separate entity, but if it's a sole proprietorship, it's part of your personal income. You can accept money. You just need to claim it. Like, okay, cool.
Exactly.
Okay. So I totally got us on like a sort of a little bit of a tangent there, but I'll let you keep going.
And so then once you've really got the record keeping in place, that is 100% your first step of just like get in the habit, save your receipts, make invoices or receipts for anything that you're accepting money for. And then once you've done that, the next step, and it's another one that people think, oh, I can't do this because I'm not a registered business. Again, I've done it, not a registered business, is to separate your accounts. And it's so important, not only for keeping your records, but even just understanding the basics of how much money your business is making and how that money is working in your business. Just have a separate account for your business and probably a separate credit card. And I'll get to why that's important in a second. But again, you don't need to be a business to do this. You can just open a different checkings account in your name and just have that as, this is where the business money comes in. This is where I pay for the business stuff out of. And it can be in your name. You can have more than one checking account. I will say, small plug, that if you're doing a separate checking account, you should look for one that's free. Like an online bank is a really good option for this because it'll give you everything you need, but you're not paying for 2 separate accounts unless you need to.
Okay, cool. So separate your freaking accounts. That was like, I never did that. I literally never did that. I was working out of my own personal accounts and just like everything was a jumbled mess. And when I actually went to go do that, it was like pulling my own teeth. Is that a saying you say? I know it's like pulling teeth, but usually that's when you're talking about another person. Anyway, it was horrible. And I have to go through every bank statement and every credit card statement and like highlight the ones that might have been business and try and find receipts and whatever. So yeah, I think that's super important. Separate your accounts.
Definitely. I can't even imagine trying to untangle that. And if all of your accounts are in one place and you still have your full-time job, it's going to really muddle in your mind unless you're like a super bookkeeper, a super accountant. You think like, okay, this is the pot of money, but you're not going to have the decision-making information about how much was your business and how much was your full-time job. And I think for a lot of people, especially for something that people feel as passionate about as calligraphy and hand lettering and like building these businesses, if you want to do that full time instead of your full-time job, you need to understand the balance of how much income is coming from each one. And so separating your accounts is going to be one of the best ways that you can do that.
Awesome. Someone is just asking, I wanted to like reiterate because someone asked if we're talking about only Canada or in general.
So in general, so what you need to do, I know Canada and the US both have sole proprietorships that you claim the income on your personal taxes. If you're outside of those two places, look up whether sole proprietorship or something like that is a thing in your country. And if you're unsure, most accountants will do a sit down first meeting with you to answer questions, even if you're paying like $100 or $200 just to have an hour long, I'm going to bombard you with my questions to make sure I'm doing this right. That might be one of the best things you could do early in your business, just to like fully make sure that you're doing it right for your country. Because again, I am not a worldwide tax expert because I don't think those exist.
Yeah. And actually, back to that, that was one of the things that I did as well. So when I say that I had to go through and separate everything and do all this, it wasn't until I actually sat down with an accountant and she was, and I like beforehand, I emailed her and I said, I'm going to sound like an idiot when we go for this coffee. I'm just going to lay it on you. Like, I'm going to ask you questions that you think everybody should know that I do not know. And so I found someone who was going to be okay with that. And after I left that meeting, I felt so much better, like besides the fact that I was going to have a lot of work to do, but she answered like so many of the dumb questions for me. So I like super recommend that tip as well. If you're, you know, not as savvy.
100%. And honestly, I don't think anyone should be able to work as an accountant unless they can answer those questions, because like you think about all of this money stuff, like in the past 3 years that I've been immersed in this world, no one is born knowing this stuff. Like everybody has to learn it at some point, whether they learned it in accountant school or they learned it when they started their first business and now they're on their third. No one knows this stuff innately. So I know there's a lot of weirdness about money and like, oh, I don't know this. And it's easy to feel really nervous about it, but no one should expect you to know this stuff if you've never learned it before. And if they do, they're not the right person to be working with.
Yes, for sure. Okay, so we have our accounts separated. We're ready to actually, you know, try and make some money doing this. What is the next kind of logical, like what's the next thing people need to know?
So the next thing is to really figure out your system. So figure out how money and expenses and all of that is going to run through your business. So you've got your separate accounts. And I mentioned a separate credit card. And so the reason I mentioned that is my absolute favorite automation system in my business is that I have a credit card that I only use for business expenses. And so when I put something on this card, it's connected to my Freshbooks account, and all accounting tools will let you do this. As far as I know, it's pretty standard. I've connected the credit card so every transaction gets imported into Freshbooks for me. So I don't have to go manually enter anything. All I have to do is keep the receipt or take a screenshot of it, upload that proof, basically the paper trail, to FreshBooks, and add it to the right expense. And it's super, super easy. And then I've got all of my expenses. They're just there and they're organized, and sometimes it'll auto categorize things wrong, but that system saves me so much time inputting my expenses, and I know it's being handled. So systems like that are a really, really good thing to get set up early so that you know you're catching everything. You know you're not going to have to go back, I guess, like February next year when you're trying to tackle your taxes and be sifting through like the shoebox of receipts and be looking at like, was this coffee business or was it not? And how do I categorize it? It's so much easier.
So can you talk a little bit about what FreshBooks does and like what are maybe some other options? Because I use QuickBooks, so like just a little rundown of like what those programs even are for someone who's never heard of them.
Totally. So FreshBooks and QuickBooks, Xero and Wave, all of these tools have some basic core functionality in common. They're basically business, finance, and accounting software. So usually you can invoice people through them, and so it'll keep track of all of your incoming income. That's a weird incoming income. It'll keep track of your income because everything that you invoice through it, it'll track when that invoice gets paid. It'll usually offer some options to have people pay by credit card or different methods for people to pay if they don't want to use check or anything like that. And it'll also keep track of your expenses. And because it has all that information in one place, generally speaking, you can generate reports. So like if you wanted to look at a profit and loss report for the year, or you wanted to pull a list of all of your expenses based on category to fill out your taxes, they can do that for you. And that's like the basic functionality. There's a lot of variation. If you work with an accountant or a bookkeeper, they will probably have a preferred tool that you want to use. Like I'm sure, Becca, your people said use QuickBooks and you were like, cool.
Yeah. So actually the other thing I wanted to kind of like differentiate here was that QuickBooks, like you can invoice through it, right? You said, or FreshBooks, and you can do that. Like I actually invoice directly through PayPal, but I also use QuickBooks on top of it to generate those reports, because you can't in PayPal, although you can see your money coming in, if someone paid you by PayPal, you can't see your expenses and you can't see the stuff like that. So it's not like PayPal's not an all-in-one. It just is taking the payments. So you still need one of these systems to like categorize everything and see those reports.
Yeah, definitely. And there's a lot of variation too in terms of the small things that are right for your business. So like FreshBook works for me because I do a lot of bigger projects that are invoiced to companies. And so because of that, FreshBooks is fantastic. If you have a very different business, like you sell physical products and they're lower price point and you sell thousands of them, that might not be the best tool for you. And so it's just a matter of looking at the different softwares, asking people who have similar businesses what they use. That's probably going to be your best source of recommendations to get a software, other than if you hire an accountant or a bookkeeper, you should probably just use the software that they tell you to use.
And I mean, on that note, like I know a lot of people like are okay with doing the bookkeeping themselves and are very good at staying on top of these things, but you have to kind of know yourself. I know myself, I'm horrible at that. And I straight up, as soon as I decided that I needed to do all of this properly, I hired the bookkeeper, and I do not regret any money that I spent on that. And I was doing that before I was doing this full time. Like I was paying out of money that I like made at my full-time job to have this bookkeeper right off the bat, because I knew that I would not keep on top of it myself. So if you're one of those people, look at how much a bookkeeper will cost you and see if it's worth it for you, because I can tell you firsthand that it is probably not as expensive as you think, and it will save you a lot of hassle and headache and just like stress from all of this, thinking that you're going to go to jail.
Yeah, 100%. That's a really stressful thought. And you bring up a really good point, Becca, is that you were paying for it out of your full-time income. And that's actually a really good lead-in to the other system that I really rely on as like the foundation of how I understand my business finances. And I talk about this all the time. Becca's going to laugh at me. It's called Profit First. And I send this book to everyone I know. I love it. So it's a book and it's a really easy read. Like if you're thinking there's no way I want to sit down and read a book about business finances, it's a super, super easy read. And the basics of it, even if you never pick it up, is how I actually organize my finances to make sure I'm covering taxes, make sure I'm covering all my expenses, and paying myself a regular salary, even with a side hustle with inconsistent income. And so how it works, just as a really quick breakdown, is in my business bank account, because it's just a checking account that I have at a different bank under my name personally. I have one account that's called income. And so that is where everything goes. So like if I pay out from PayPal or Stripe or whatever, it all goes into this one account. Then twice a month, I take all the money out of the account and I allocate it to 4 different, again, no fee accounts. I'm not paying for like 5 different accounts here. but I have 4 other accounts in that bank. It's really easy to transfer the money. And I've set up percentages. So if 100% is that income that I'm trying to allocate, I put 50% of it into owner's compensation. So that's what I pay myself. And that's where like I can take that money. That's just like giving myself a paycheck. And then 20% of it goes to operating expenses. So that is like paying for your bookkeeper or buying new pens, which is like, it's kind of great when you think about it. This is 20% of every month's income that just goes to running your business. And that's the kind of stuff that you would claim on your taxes as the costs of doing business. 25% of it goes to taxes. So I really, really strongly recommend you get in the habit of saving money for taxes, because I feel like anyone who has ever spoken to an entrepreneur has heard a story, like a horror story of the first time you had a tax bill that you weren't prepared for. And you're like, this is the Becca. It's so common because you don't know. And it's not a thing that really anyone tells you other than right now is like, if you get in that habit of putting away about 25% for taxes, you're probably going to be covered because you are putting 20% towards expenses that you're going to deduct from your income on your taxes. But being prepared and knowing that you're ready and covered and like not going to jail for not paying your taxes is a really comforting thing. So every month, 25% of whatever I take out of that income goes to taxes, and I just keep it in that account until I go to file my taxes. And then 5%, which is what's missing from those, is profit. And so this is a very like controversial thing of, if you're growing your business, should you take money out for profit? But my business is small enough and it's, a sole proprietorship. So it's just me. And so what I do is I put the 5% in there every twice a month when I kind of allocate that income. And then every 3 months I take it out and just treat myself. So it's never huge. Like it's honestly really not huge. 5% of what I make as my side hustle, but it's just a nice like $100 or $200 to be able to say like, okay, like, yes, I work hard on top of my full-time job to run this business, and here's some profit, and like, go treat yourself.
Yeah. And I want to talk about this like profit first stuff too, because you make it sound really simple and like all these accounts are there and whatever, but the book is actually really great at like breaking it. They're like, okay, first thing you're going to do is go to the bank. I'm like, okay, check. I'm here. Now what? It's like, now you're going to open these 5 accounts. And it's like very, it's like a really simple process to break down. So I definitely recommend, if anybody's listening to this and is, worried about finances and how to pay themselves and all this stuff, like go get that book. It will help you. Yeah. So like, I think it's a great place for people to start. So I just want to pick out one point of that people should remember is to put away, like if you make $100 from a seating chart or whatever you're doing, you're putting away 25% of that, like instantly. That's not your money. That's where people are going to go to jail. Not go to jail, but you know what I mean? Get in trouble if you're not actually saving that. So save it, put it away right away.
Yeah. And it's so important because, especially when you're coming from the world of having a full-time job, is if you actually look at your pay stubs, this will really drive it home if you've never looked at them. What shows up in your account, there is like hundreds of dollars on top of that you get paid that you never see because your company takes it off for taxes for you. And so that's why you don't end up usually with a full-time job with like a $10K tax bill at the end of the year, because your company took it off for you. When you're the company, you need to handle that.
Yeah, which is like a whole hurdle you have to get past. But once you start doing it, it's the same as with those pay stubs you would get from your job. Like you expect that much money will be taken off every time, and you get used to it. And it just becomes like second nature. If you made $100, you really only made 75, or however you want to allocate your taxes.
100%.
Yeah. Yeah. Well, 25%. Oh gosh. Okay. Okay. So let's just kind of do like a recap of what people have done so far. They've separated their bank accounts. ideally just gotten like another free checking account that they can use for the business. Ideally another credit card. They have a system like Freshbooks or Quickbooks or something that they can put their reports and their expenses and stuff like that. They're tracking their expenses, so they're keeping their receipts. I don't even think we talked about that, but keep your receipts for everything.
Definitely, yes.
That was another one that was hard for me because I tend to just like throw them in the bottom of my purse and then never see them again. And then what else do we say? Well, and then read Profit First if you haven't. Anything else like so far in the conversation?
Yeah, I think that and save for taxes. Outside of Profit First, just even if you never read that book, save 25% of whatever you get for taxes.
Okay, so moving on, we've done all that. Anything else we need to get to?
Yeah, so I think, and I remember, so I love my full-time job right now, but previously that was not the case. And so I would sit at work and be like, oh my gosh, like I need to quit my job. When can I afford to quit my job? I want to quit my job. And so I know that when you're looking at your business finances is one of the biggest questions. Like, when is my business able to support me fully? And like, when can I quit my job? And the answer to that depends, yes, on your business finances, which we've been talking about, but it also depends on your personal finances. And maybe this is just me like coming back to my comfort zone, which is talking about things like budgeting, like personal spending, but it's so important because if you understand what your baseline expenses are every month and then what your variable spending is, so like what you like to spend money on, but you could give up if it meant being able to start your own business and go full time with it now, having that understanding is the other piece of the puzzle to answer that can I afford to quit my job question, because you've got your business finances, you know how much is coming in every month, you know how much you can pay yourself every month because those are different. And now you just need to understand your personal finances. So how much do I need to make every month to make this a sustainable choice for me? Because yes, there's a ton of examples and anecdotes of people who were like, I've made $3 so far and I'm going to quit my job. And it works out for some people. But I think it's also like a huge stress point of if you quit before you're ready financially or before you've saved up enough or any of these things, it's not going to be as smooth as if you have built things up and you understand the choice you're making, even if you're not quite there financially. As long as you understand what you're doing, that's really where you want to be before you go full time. And you need to understand both sides of it to do that.
I want to say one thing because I know you're not, I mean, you're a writer, but you're not like a letter or creative, that kind of person. Mm-hmm. The other part I want to talk about in this, like quitting and doing this full time, is that the minute you quit your job and you have to do it to make a living, it changes your passion for it a little bit. So to anybody who's wondering, you know, if they would want to do this full time, if you're not super passionate about it already, and then you have to do it to make a living, it changes things. It will make you not enjoy it quite as much. So for sure, the finance like helps with that. If you're actually making good money and you're enjoying what you're doing, then it's great. But if you're not making money and you're just like questioning your abilities as an artist on top of that, it's no good. So yeah. Okay. I'm just going to like leave the creativity part out of it now and let you get back to the money stuff.
So with the personal finances, if you're wondering like, but how do I know that stuff? One of the best things you can do is track your spending. And I know we talked about tracking expenses earlier, and this is like my like broken record thing that I always say because it's so powerful, is I think a lot of us, especially when we're not used to paying attention to this, have really no idea what we're spending on stuff. And I say that because the first month that I tracked just my grocery spending, I almost threw up. Like I was so shocked at how much we actually spent on groceries for two people. I was baffled. There's no way this is right, but it was. And because I had that information, I could either adjust in other areas or pay a little bit more attention to not buying the most expensive food known to man and just be a bit more reasonable with it. But until you have the information about where you're spending your money and where that money is going, you can't make the choices that you want to make about it because you don't even know where to start. So tracking your spending, you can do it a couple different ways. You can do pen and paper. I feel like that would be a popular option with this crowd, with like the amount of beautiful pens and beautiful paper products that you have. You can do an Excel spreadsheet, which is my personal favorite way to do it. And I just have it kind of every time, not even every time I spend anything anymore. It's kind of like twice a week. I'll look at my bank statements, I'll move everything over to Excel and just have it kind of auto updating what I've spent in what categories and just keep an eye on it. Or you can use an app. So there are a bunch of apps. Mint is like the granddaddy of personal finance apps. So you connect it to all your bank accounts and it tracks things for you. So it tells you, you know, when you've hit your budget for different categories. There's a bit of setup work involved, but once you do it, it's pretty automated. So getting that information about your personal finances will really help you see. I mean, if you are working towards going full time, let's say you right now spend $3,000 a month on everything, but maybe 500 of that is spending that you would happily give up or scale down if it meant that you could pay yourself $2,500 a month and have a sustainable kind of work-life balance and be full time. So that's really what you need to figure out in terms of those different sides of the numbers, and tracking your spending is really 100% the best way to get that information.
Totally agreed. I mean, I don't have to say it again, but I was really bad at that at the beginning. Okay. So, and like, I think tracking that personal side of your finance is also just a lot easier if you've already done the 5 steps we've talked about earlier, where they're already separate. So again, separate your accounts. I'm realizing right now that I think the notes that I'm putting up on the screen right now as we talk aren't showing up. It still says separate your accounts, which is what it's been saying for the past like 10 minutes. So I think people are going to understand that one point at least.
It's a good point. You know, if that's all that comes out of this, it's super helpful. It's a good one.
Okay. So, I mean, like so far, this has already probably blown a lot of people's minds, and it would have been really great for someone like me to hear this at the beginning. So is there more that we should be talking about, or should we just kind of do like you're nodding like, yeah, there's more.
Well, and so the thing is, if you've done all of this stuff, you've got a good foundation and you still have questions, or you are still really worried about it, spend a bit of money, put a bit of money aside and go talk to a professional who's really clear on what you will need for A, your business, B, where you're located, and C, the laws and regulations and accounting standards where you live. So that is different everywhere. That could be different like state to state or province to province, never mind country to country. And so there are a lot of nuances here. I really think having even watched this is going to be really helpful for you, because you're at least going to go in knowing some basics. And the basics are terrifying because like no one wants to ask like, can I get a second checkings account, right? Like you don't think like, I don't want to ask that to an accountant. I don't even want to ask that to an accountant. But having the basics that we talked about here is going to be really, really helpful. And then if you're still worried or if you still are unsure, find a professional, find a good one who is not going to make you feel awkward or uncomfortable asking these questions. But it is a really valuable thing that you can do for your business and your financials and all that.
Yeah, I think that's a really good way to wrap that part up, because we do have a bunch of questions that we should address too. And some of them are like, we'll get a little more specific about kind of this industry, which I know you might not necessarily have the answers to, but I think you will. So, okay, so for anybody listening, we're just going to talk a little bit about the questions that were submitted ahead of time, and then we'll open it up to questions live if anybody has any. So save those for a couple more minutes. The first one was from Kathy, and she asked about setting up stock for your products. So financially, like how do you determine how much stock you can get, or like how much you should get without, putting your business into the ground before it even starts?
Totally. And so this is an interesting one. For me personally, I have the system of profit first, right? So I can really see very clearly in my accounts, if I have my 20% of income that goes to expenses, one of those expenses could be ordering new inventory. That said, it's also not the only expense in your business. And I take a very kind of measured approach to it because I actually work for Shopify by day and I write about e-commerce businesses and selling physical products. And the one thing that we always come back to again and again is you can test products these days. Like you don't have to order 1,000 of a product or even 100 of a product before you've even tested if there's customer demand for it. So when I think about inventory and investing in new products or stock or anything like that, my big thing is invest as little as possible as you can to get enough product that you can test the idea, because you can do all the planning you want, but at the end of the day, until you know whether or not people are going to buy it, you're guessing. It might be an informed guess, but I always recommend, like, don't put a ton of money into inventory before you've tested whether it's going to work with your market.
And like, okay, kind of a follow-up question to that. Should you use your own personal money to buy stock for your business? Like, it's kind of a catch-22, because if you don't, then you can't really start your business. But if you do, then you're not using money you've made in the business to, propel it.
Totally. And I think that that's totally fine. I think what you really need to do, if you're investing your own money, even before you've made any income, keep your receipts, because that still counts as a business expense. So if you invest that, a couple $100 now, and then you go on to sell it and you make money, you want to be able to claim that against the money that you've made. So a lot of people invest their own money in getting their business off the ground, invest before they're making any money. I ran my website for like a year and a half with like hosting fees, and I bought images, and I bought like graphic design stuff. I bought so much before I made any money with it from my own personal money. But just keep your receipts and track that, because when you're making money, you want to be able to claim it.
And just as we're talking about sort of using your own money to start up these things, there are a lot of ways that you can bootstrap, it's called. So like not really spend very much to get things off the ground. And that's like a whole nother topic for a conversation. But there's a book called The $100 Startup. Have you read that one?
Yes, it's amazing.
So I'm going to write it here. I don't know if it'll pop up on the screen, but The $100 Startup by Chris Guillebeau, right? Mm-hmm. Which is a really good one for anybody who is wondering about that kind of thing. So definitely watch that one or read that one. Next question we have is from Anna. Anna asked about sending invoices through her name versus a business name. Is that okay?
Totally. So it really goes back to what we talked about before. Obviously, it's going to depend on your country and the laws around different forms of corporations. But in Canada and the US, you can be a sole proprietor. You can invoice under your name. You don't need a business name to start invoicing.
Okay. And so we talked about this a lot at the beginning to like dispel the myth about you can still be using your own name and do this. And we talked about this before we went on air, but can you give the example that you were talking to me about?
Yes. So the best way to think about it, and I know that a lot of people have this worry, right? Like, I can't accept money if I'm not incorporated. I have to get all this stuff in order before I accept money. And think about all of the people that you pay who are definitely not incorporated. Like the example I gave was a babysitter. And no, your babysitter is not claiming that like $20 for a Friday night on their taxes. I don't know what the going rate is for babysitters. Maybe it's way more expensive, but they're probably not claiming that like $20 in cash on their taxes, but you're paying them for services rendered. And that is a totally legitimate transaction. And it's just as legitimate if someone's paying you for a service or a good that you're delivering to them. You can charge them money and you can invoice for it, and that counts. You just have to report it on your personal taxes.
I think that's the best example ever. That's like, and it makes you feel a lot less like stupid, because if a 12-year-old can do it, like you can figure it out. Okay. So Pam asked, she said she's been in business for a while and her business is still feast or famine. How does she break out of that cycle? And so she had asked about kind of some marketing questions, which we won't touch on, but from a financial perspective, how can you kind of work around that? Like for us, a business like this where you're doing calligraphy for like weddings and stuff can be really seasonal. So how to kind of work around that?
Yeah, so seasonal businesses are always going to be tricky because some months you're going to be so busy, you're making so much money, and you're going to be like, I'm rich. But then like January comes and there's no weddings, or greeting card season is over and you're like, well, I'm going to make $0 this month. So one of the ways that I personally tackle that in my business, because there are slow seasons in anything, is with that owner's compensation amount. So how during big months where I either have a big invoice get paid or a giant project, but I know I'm not going to be working for the next 3 months on something that size, is I actually take the exact same percentages. And so when that money comes into my income account in my profit first, then I take 50% of it and it goes into owner's compensation. But this is the really key part, is I don't pay myself any more or less based on how much goes into that account. So I pay myself a set salary every single month, and I estimated it based on what I thought I was going to realistically make in a year. And I wanted to average that out and see if I could hit that every month. So I just wanted to make sure that there weren't any months where I couldn't pay myself that amount. So I aimed a little bit lower. I set it and I started and I said, like, okay, I'll pay myself, let's say like $500 a paycheck. So $500 twice a month out of this account. And if I have a really big month or a really big season, I don't increase that because I want to know that I can keep paying myself that beyond just the busy season. And so that's one of the ways financially that you can kind of even out, if you have big months and a slow season, how you can even out how much you're earning from your business.
I think that's going to be a really good tip for a lot of people, because I know, especially, and the same now, I pay myself a salary. Like I get the same amount every 2 weeks, which is only a recent thing. And until then I was kind of just like paying myself what I needed when I needed it, which is like not a good way to do it. But I think seasonally, like it's hard when it's a seasonal business because you have like a huge influx, especially in the summer or wherever you are in the world. But yeah, it's hard to manage that. So that's a really good tip. We touched on this one a little bit already, but Andrea asked, what is the best tool for tracking finances, invoices, tax reports, and that kind of thing? So, I mean, we talked about QuickBooks and Freshbooks. Are there any other kind of tools that you recommend, or things like just little tips or tricks?
Yeah, I really think it all comes down to your industry, because some industries even will have financial tools that are specific to your industry, specific to the nuance of what you need as a calligraphy business or a wedding business. Like, I think, is that what Honeybook does?
Honeybook is, I mean, I don't use it, but it's like, as far as I'm aware, it's used for like client management and also invoicing through there. So you can like track your project and that kind of thing.
Okay, cool. And see, like, and that's the thing, is I wouldn't know all of the different tools because I'm only in one industry and I've only used one tool. So I would always say, ask people who have and run businesses that are similar to yours or in a similar industry and have similar needs. Ask what their experience has been with the different tools, because that's where you're really going to get the best recommendations.
Okay. And then we also touched on this one, but Nancy asked, do I have to have a tax ID first in order to sell anything and to deduct expenses? So I'm going to piggyback on this a little because we've talked about it like 5 times already. No, you don't need to do that. You can sell under yourself. One other person, though, is asking, if you're not making a profit yet, like if you're using your own money to put into the business and use for expenses, are you still able to claim that loss on your income taxes? And I don't know if if we should be asking an accountant this question, but it's worth throwing it out to you.
Yeah, so that is a situation I would definitely talk to an accountant about, because if it's minor, then maybe. So if you want to claim $2,000 as a loss because you put it into your business and you didn't make any money, maybe that is fine for your tax situation. But the reason I say talk to an accountant is that there are certain things that tend to flag your tax return for audits. And I think, or I've heard, that reporting a loss with no reported income is probably one of those things that might flag it. So if you're going to do it, I'd say talk to an accountant, because you're going to want to make sure that they have looked it over. You have all of the required paperwork. And honestly, and I've heard accountants say this is that sometimes it's just not worth it. If it's going to save you $100 on your taxes, but you're 100% going to get audited for it, it might not be worth it. So, and that's the kind of industry experience that you want an accountant for, where they understand the tax code, they've been working in this in your area, they've seen people go through these tax situations. So I would definitely say talk to an accountant. Personally speaking, I didn't claim any of my expenses before I started earning income. So personally, I don't know, but talk to an accountant for sure.
Yeah. Okay. That's what I would assume to talk to an accountant on that one too. Those like little tiny details, I would never have a clue. Okay. So that is all the ones that were pre-submitted. So I'm just going to open it up for questions here. I'm trying to look if we had any that were submitted. Someone asked, when you were talking about profit first, someone was asking, what's the difference between profit and owner's comp?
Totally. So owner's compensation is what I pay myself no matter what. And so it's just really regular. It's where I take out my kind of regular paycheck. Profit and the whole, like the stories that they tell behind this in the book, and the reason why it's so important to get in this habit is that it's really easy when you're starting a business to pay yourself the absolute bare minimum and put everything else into expenses. And your expenses can totally take over your business. You'll never, ever pull a profit. And you'll just like, as your business grows and your income grows, so do your expenses. And so the reason that they have profit incorporated here is that you get into the habit of taking a little bit of, like keeping a little bit of margin on your business to reward yourself and have that like every 3 months you get a little bonus, because as your income scales up, you're training yourself to keep your expenses within this like set amount so that as your business grows, so does your kind of bonus and your compensation for doing the hard work of building a business. Because it's so easy, especially when you're running a business and you think, well, it's an investment in my business. I'm just going to spend on this expense because I'm investing in my business. I'm investing in myself. That's amazing. And it's an important part of building a business, but it's so easy to start overspending on your expenses because it feels like really good spending, right? Like you're doing it for the business, but it's important to keep that kind of in check and make sure you keep a little bit for profit for yourself.
Yeah. And I'm just going to once more say that you should read that book because it's super helpful. And like Desirae wasn't kidding when she knew that I was going to know exactly what she was saying, because she's told me to read it so many times. Okay. So again, if anybody, like I have a note up here that's running saying, ask your questions now, but I don't think it's showing up. So if anyone has questions, now's the time to submit them. Elizabeth had asked, do we need to incorporate a business to sell on Etsy? And I'm just going to jump in right away and say that I have an Etsy expert coming on here in, I don't know how many weeks, but they are coming. We're going to talk a ton about Etsy. So I'm just going to like leave that one out, unless Desirae, you have experience with Etsy that I don't know about.
My quick answer is you don't need to incorporate to sell online anywhere.
Okay. Very quick and easy. Okay. So as we're waiting for some more comments to roll in here, do you want to kind of just do like a recap of, if you were to sit down with somebody who has never started a business before, has no idea what they're doing, what are the like step-by-step things you would tell them to do?
Definitely. So separate your accounts is first and foremost. You want to have a clear view of how much your business is making and how much it's spending. And the easiest way to do that is to set up a separate checking account. You don't need to incorporate. You don't need to have a business number or anything like that. You can just open a separate checking account still under your name and just start to get that understanding of how money is coming and going in your business. The second thing is, of course, you absolutely don't need to incorporate, which I just said, but you can earn income and you can deduct expenses on your personal taxes. So do not let that hold you back from charging for your work, because your work has a lot of value and you should be earning money from it. And then the next thing is just get some basic systems in place so that you are automating, tracking your expenses, no matter what system you're using for your financial expense tracking and reporting and all that. So like a Freshbooks or a Quickbooks, link a totally separate credit card that, again, is under your name. Link that to your system so that everything you put on that card is your business expenses and they get automatically put into your financial system. keep your receipts. So even though you've got the fact that it went on that credit card, that's not enough to claim it on your taxes. So you will need to either keep the email receipts, take a photo of paper receipts if you don't want to hold on to the paper. I mean, yes, probably you should still hold on to the paper somewhere, but for organizational purposes and reporting purposes, you can take a picture of the receipt, link it to that expense in your system, and get that all set up and handled, because it's a little bit of work up front, but it'll save you a ton of time on your monthly reporting. It'll save your bookkeeper a ton of time if you hire a bookkeeper, and they will love you for it. And then figure out a system for how money actually flows through your business so that you can understand how much is going to taxes, how much you can actually pay yourself, because that top line number, so if you get paid $100, you are not actually making $100. You need to put money away for taxes. You need to cover your business expenses out of that as well. And so then after you take those things off, if you set up a system where you understand, okay, like either 50 or 60% of that money is what I actually make, it's really good information to know. It'll help you figure out if you can go full time or not, or when you can afford to go full time. And it'll really help you just make sure you're covered for tax time, which is a really big thing. And the last thing that I would say is just take a look at your personal spending. So if you are trying to go full time with your business and you want to know at what point you can afford to leave your job and just rely full time on your business and do it like all of your time, then make sure you understand your personal finances. How much do your baseline expenses cost, like food, rent, any bills? And then how much is your discretionary spending on top of that? Because that's really where you're going to get a view of how much you would need to pay yourself to live the exact same life you live right now if you were to get rid of your full-time job. It'll also give you decision-making information. So if you spend $300 a month at Starbucks and you'd be willing to cut that in half, that's $150 now that you don't have to make from your business because you're scaling down. And it's tough, like cutting those spending things is tough. And there's a lot of feelings and emotions and stuff with money. But if you're doing it so that you can live your dream of running your business, it feels a lot easier.
Yeah. And for anybody who's needing more advice on the personal finance stuff, you need to go look at Desiree's blog, which we're going to talk about in a second. So we've got a couple other questions that are rolling in here, and a couple of them we've already covered. So just to reiterate this one, when should I create a separate bank account with a separate card? I'm still making next to nothing or sometimes nothing each month. So should you still do that if you're not making any money?
So I think that you should probably, at the point where you're making like $100 or $200 a month, start to look at that. It might be useful to set something up. Again, you can set things up for free. So you can set things up just to be prepared for it and really see like, okay, this month I made nothing and there's nothing in that income account. But the big thing is that I'm definitely like not a bank person here being like, you should buy more accounts. There are a ton of free online checking account options that you can get that would be perfect for this. So you're not adding a $5 or $10 a month expense for every additional account. It's free, it's online, it's easy to check. And so you can open it at any time. But for me, I was making about $200 a month when I opened my separate account and I got it. It wasn't so long leaving it that it was a big hassle to separate it out. I just kind of switched all of my like direct deposits from like PayPal linked account and Stripe and all that, just switched them to a new account. But realistically, you don't have to do it right away if you're not making anything, but it might be helpful to even just, if you just save all of the money coming in, if you're making like $20 a month, you just put it there and you save it in a separate account. You see like my business has made X.
And as far as the credit card part goes, like, wouldn't it make sense to just get the credit card as soon as you have any expenses? Like you should be putting them on that separate one if you can.
Totally. Yeah. That system was super, super helpful. Again, I would go with a no fee credit card, especially if you're starting your business. This is not a card where you're thinking like, I want to earn a lot of points, or like, I want to pay a $200 annual fee to get like the best card. The best card is going to be a no fee one. So you can use it when you need it, but there's no like incentive to spend more because you're probably like, I don't think I earn anything, any points or anything on my business credit card. It's just the convenience factor. And so it's like $0 for fees, but I don't earn any points. And that's fine with me. if your business grows into an empire and you're spending like tens of thousands of dollars in expenses every year, you can look into a new card where you get some points for that. But when you're just starting out, just a no fee credit card. You don't need to go with a high limit either if you're worried about taking on additional credit and how that's going to impact your credit score. Just like a no fee, low limit credit card is a good bet.
Okay, cool. Yeah, I agree with that. I don't try and make any, points on my business credit card. It's literally just so that it's separate. Mm-hmm. It's just so much handier. Okay, so the other questions are all ones that we've covered already. So is there anything that, we just got one more. Lisa just got in right in the nick of time. So Lisa says, do you recommend the separate accounts and credit are at a different banking institution than your existing personal accounts, or does it matter as long as there's no fees? And she said, so much great advice. Thanks for keeping it simple.
Oh, thank you so much. I really, really hope it was useful. So that's really great to hear. I do keep mine at a separate institution because I really like having a separate login. It feels like my business bank, even though it's just under my name, like I'm not incorporated or anything. When I log into that account, it's totally separate and I don't see my paycheck or my personal savings or anything. When I log in there, that's my personal. And then when I log into my business bank, it's my business bank, even though it's just a different account and a different setup that I've done there.
So it's more of a mindset thing than an actual piece of advice that is like valid for financial reasons.
Totally. Yeah. There's no like financial basis or accounting basis. It's very much the personal finance side of things. Like it's like the recommendation. So a lot of people recommend, let's say you have an emergency fund and you like really don't want to spend it. You don't want to touch it for any of your day-to-day spending. It's like just for emergencies. A lot of people, myself included, will keep that at a different high interest savings account that you don't see every time you log into your regular banking, because it's easier to pretend like it's not there when you're not seeing it every day.
Yeah, agreed. I know we said that was the last question, but I have one more and I don't want to disregard it because she said she has a dumb question and I love those because I was that person. Okay, so she asked, excuse me if this is dumb, but if you are not registering the business, why should you pay taxes or what kind of taxes are you referring to?
Totally. So if you're not registering your business, the money you're earning counts as your personal income. So if you earn like $50,000 in personal income at your day job, and then you earn an extra $10,000 from your business, it's the government thinks that you've earned $60,000 in personal taxes. And so from the $50,000, your workplace will take that right amount of taxes for $50,000 off of your paycheck. So you don't need to worry about that part. But from $50,000 to $60,000, you haven't paid taxes on that money yet because you've gotten this money. So it's personal income for you. And they are going to want you to report that because not doing it, that's like earning money under the table, which is what you always hear in like, I don't even know like what pop culture reference I'm thinking of right now, but earning money under the table is when you're paid in cash, there's no paper trail and you don't report it. But you really do have to report that money because you want a paper trail here. You're building a business. You want to scale this up. And if you're claiming expenses against it, that's one way to offset those taxes. So this got a little bit complicated. I got off the tangent, but that $10,000, you need to save taxes to pay because it's $10,000 of personal income you earned outside of work. And that's how the government thinks of it. No matter where you are, it's extra income that you got from your business, but it's counted as personal income. I hope that answers your question.
Yeah, it for sure. I think it totally answers the question, but I think a lot of people get confused with like tax that you pay like HST or wherever you are in the world, that extra percentage when you buy something versus income tax. And I remember that being like, every time we would say taxes, I didn't know which kind of taxes we were referring to. So what we're referring to is income taxes. If you are making extra income, you are paying taxes on that income.
Mm-hmm. And it's definitely the income tax. Sales tax is a beast. Like if you are selling goods or services and you have to pay sales tax on them, talk to an accountant. And most places, I'm speaking for Canada now, but I believe the US might have something similar. There's a threshold. So if you are earning under a certain amount, you don't have to pay or charge sales taxes. But so you have to pay them on things you buy, obviously. You don't have to charge them to your clients. And so don't worry too much that we've brought up sales taxes. If you're making like $2,000, you don't have to worry about touching sales taxes because you're probably not subject to them. But once you start earning a fair bit of money, talk to an accountant because sales taxes are so complicated.
Yeah, and that's totally dependent on where you live too. So it can get like really complicated. But I remember that scaring me at the beginning. So again, back to that tip where if you're scared about things, just go and talk to somebody, get somebody that you can ask all the dumb questions to. But speaking of that, I think we're going to shut down the questions now. We've been on here for almost exactly an hour, which is perfect. So Desirae, if people want to find out more about you or actually, do you have anything that is like up and coming in your world that like people should know about that's going to be relevant to this? Or is most of the stuff you're doing on the personal finance side right now?
Yeah, so I blog about personal finances. So I blog about things like saving up money for a house and budgeting your income and tracking your spending and all of the feelings that go along with that and how to optimize in a way that actually feels good. So not like you should save for retirement, young lady, because that is the worst. And that's why I started my blog, is I got so sick and tired of every finance blog talking to me like that. But so I blog about that stuff. So there's nothing coming up. I have no big launch to pitch to you guys or anything like that. I really like this stuff. I like demystifying it. That's what I do on my blog for personal finance stuff. And I've got some resources on the blog if you're interested in that kind of thing. And I've put together a landing page that Becca has a link to that I'm sure she will share with you of just kind of a little bit of what we went over and a little bit of intro and other links that you can use to find out more about the personal finance side of things on my site. And yeah, that's kind of it.
So yeah, I don't think the notes that I'm putting up here are working, but if you go to you can find Desirae's website at halfbanked. So HALFBANKED.ca. So .ca, it's .ca for Canada, but also the advice is relevant to everyone. And then if you want to find the little recap that she did, as always, you can find the interview that we're doing right now. It'll be on YouTube soon, but you can go to thehappievercrafter.com/Desirae-Odjick. So all her name, which I'm actually going to try and pop up back on the screen because it's hard to spell. But yeah, so this will all be available as replay, and the comments section will stay open if anybody wants to ask a couple more questions. Desirae might be able to hop in there and help out, or I will if I can. And hopefully this was super useful to everybody. Thanks so much, Des, for helping out. It was, I'm sure it blew a lot of people's minds and made people hopefully feel better, not worse.
Awesome. I really hope so too. Thank you so much for having me. Thank you again to everyone for being so kind and understanding about the schedule switch up. I really appreciate it. And I really hope this was helpful for everybody.
I can say with certainty that it will be. So, okay. Well, yeah, thanks again. And I'll talk to you later.
Awesome.
Okay. See ya.
Bye.